Hello, traders. FX Pip Collector here. Today is Monday, January 13th, and I'm going to be analyzing the US dollar pairs, including gold, and we're also going to take a look at a small handful of the JPY pairs. But also, don't forget to check out my free Discord community. The Discord community itself is 100% free. You never have to pay a dime if you do not want to. If you would like to join my membership and get access to all the benefits listed here below, then the link for that is fxpipcollector.com, and it is only $30 per month. Very, very, very cheap. So anyways, I wanted to start off today by looking at the US dollar. When it comes to the US dollar pairs, the US dollar analysis is definitely for me by far the most important analysis we can do. And I just wanted to point out that I still think that this is a wave A. And to me, it still looks like one, two, three waves up for waves up, one, two, three waves down for three waves down. And it still looks to me like it's forming a five-wave pattern to the upside for what I think is a 3-3-5 pattern. A 3-3-5 pattern is normally a flat, which is a very recognizable pattern in the Elliott wave world. So I think the first move down is A. I think this is likely three waves of B, 3-3-5 of B, and I still think there's a pretty good chance at some point this is going to end up continuing back down for a big wave C, which will likely take out the low of wave A. Now we are at the 78% Fibonacci retracement of this last push down right here, and we are also at the 100 and we're just shy of the 123 Fibonacci extension of this wave A of B projected out the bottom of the wave B of B. So definitely could be an area of resistance, but keep in mind that I really do not think the trend is over. If anything, it looks like a one, two, three. It looks like it might pull back like a wave four and then go up for a wave five before we even get this real turn. So keep in mind that it's probably several weeks away before we get this real turn to the downside that we've all been waiting for. So anyways, let's move on to the euro dollar. Euro dollar time frame. We'll start off on the daily. Now, one thing to keep in mind is that we went beyond the 50% Fibonacci retracement of the higher time frames. The next Fibonacci level is right here at the 61.8, which is right above the 1.01 area. So yeah, there's still a lot of downside momentum, and I personally am definitely still looking for sorts in a downtrend. I got my Fibonacci extension measuring this wave and projecting off the top of this wave. We are at the 100% Fibonacci extension right now. Maybe they will pull back right there. Maybe it will not. I personally will not be trying to go long either way. For me personally, if it does go up and break structure, then that does not tell me that it's time to go long, but instead it tells me that it's time to start getting excited about looking for another three-way pullback for the continuation of the downtrend. So, like I was showing on the US dollar index, the trend is still up on the dollar index. I think that the dollar index would have to make a 345, meaning that the euro dollar would probably have to do something pretty similar. So if you are a short time frame trader and you do see a break of structure, then you could try to go long at the end of a wave B of a ABC correction, but you still want to primarily focus on going short. And this all depends on whether it even breaks structure. I mean, it doesn't even really have to. I mean, it could keep going down from here. Keep in mind the trend is your friend. If you were going short, going short, going short, going short, going short, you would have made a lot of money these last weeks. If you were trying to go long, then you probably gave a lot of money back to the markets. Moving on to the pound dollar. The pound itself is actually what's causing such a strong move to the downside. If you actually look at other pound pairs, all the pound pairs are moving down really, really strong. And we are pushing beyond this 88% really strong. So I definitely do not think this trend is over. Even if it does make a move to the upside, I almost guarantee that it will end up making a lower high on the daily, lower high on the daily, and keep on going down. So the momentum is definitely still to the downside. Going down to the 1 hour time frame. Now, yeah, I do agree that it probably will go up. It probably will break structure. But for me personally, if it does this, I will definitely be excited. Not to go long, but I'll be excited to try to get in another three-way pullback just like back here. One, two, three waves up and pulse it down will give me another entry to go down for the continuation of the downtrend. Especially on the pound dollar being so strong to the downside on the daily time frames, I definitely would not try to go long on this one. If you are, kind of a risk taker and you are a short time frame trader, maybe you could get along at the end of this wave B, but definitely the more profitable trades are definitely still going to be trying to go short at the end of every single little three-way pullback you see on these shorter time frames. So let's take it down to the Aussie dollar. Aussie dollar not quite as strong to the downside as some of the other ones, but the Aussie definitely did break that 100% from the weekly time frame that I showed you last week. And we definitely have one, two, three, four, five waves down. I actually think the Aussie is making the clearest downtrend because I think this is clearly a wave one, wave two. There's clearly a trend right here with a break. So one, two, and then there's clearly a trend right here. So probably we're in a wave three, which means even if it does start to move to the upside, it's probably just a big wave forward and probably down again for wave five, just like what I was showing on the US dollar index. So keep that in mind. Let's take it down to the 1 hour time frame. So yes, I do think that we probably are due for a big wave forward. A wave forward would be a pretty big move up, but we need to see some sort of a break on these sort of time frames to believe that. If you see a break and then you see a pullback, then you get a Fibonacci bounce, then okay, fine, you can try to go short long. But while you go long, you have to keep in mind that it could literally just make another ABC correction, another three waves up, another impulsive move down, another break of structure, and it could easily just continue the higher time frame downtrend. So yes, you maybe if you get a break of structure, you could justify going long at the end of a wave B, but keep in mind that every single higher time frame is down and that the big money is probably still going to be trying to go short at the end of ABC corrections. Let's take it down to the Kiwi dollar. Kiwi dollar, I don't really analyze because it's exactly the same as the Aussie dollar. Definitely looking for shorts in a downtrend. US dollar CAD, to me, definitely does have that kind of 3, 4, 5 shape to it. But there's no break of structure, there's no lower high, there's no reason whatsoever to think that this trend is over. If we take it down to the 1 hour time frame, I actually just got out of my long this morning. We went long last week way down here. I just got out this morning. But I really do not even think that it is over. It might even end up pushing up a little more. I think there's a chance that we could get a pullback. We have a lot of really big news this week starting tomorrow, but especially on Wednesday, we got CPI for the dollar. Kind of seems like we might get a little bit of a pullback, but that probably is just going to be another correction to the uptrend. So if you see another one, two, three waves down, another impulsive up, I definitely would continue to look for longs every chance I got. So taking it down to the US dollar Swiss, which is another trade that I just got out of. I held on to it for about 6 days, which by the way, every single trade I take, I do share with my members at the time of entry on Discord. So this is another trade. I mean, I do think it is going to go up and take out the previous highs from like the weekly time frame, but yeah, there's no sign of it being over yet. I mean, this is all higher highs, higher lows. I mean, it does kind of have a little bit of a five-wave pattern, but I've seen five waves, and then I've seen six waves, seven waves, eight waves, nine waves, and it just keeps on going. So just because you see five waves does not mean that the trend is over. Going down to the 1 hour time frame. Now notice how this is the high right here. So that means that if it goes down and breaks any of these lows, that is not a break of structure. You would have to go all the way down here to give you a proper confirmed break of structure. Because even if it goes down and takes out these lows, it could just be another A, another B, another C correction to the uptrend. So just make sure you understand what a break of structure is and what breaks of structure actually tell you something and what breaks actually really don't tell you anything important at all. So I personally am still looking at this as a possible another ABC correction to the uptrend. So definitely still on the long side. Moving on to gold. Gold just kept on drifting up last week, as you can see. We are pushing down pretty strong this morning, but we'll see what this turns into. Now, I still think that this move up is very corrective looking compared to this move down. So I still am not ruling out the possibility that this does this turn down in a big wave C, and that this is like the A, and this would be the B, and down for the wave C of wave 4. That's kind of what my thoughts have been for a few weeks now. But like one of my members pointed out, I mean, there's also a possibility that this is an A and that this is the three waves down for B, and that we're actually in a wave C, which will likely take out these highs to complete the A, B, C of B. And then once that's complete, then we go down for the bigger wave C. So that definitely could be a possibility. And if we do not see a break of structure on this move up, on shorter time frames, then we'll know that we should keep on looking for longs. Going down to the 1 hour time frame, yes, we are pushing down pretty strong, but is there a breaker structure? This breaker structure right here does not tell me anything whatsoever. The last major swing low is actually right here. So if it goes down and breaks these lows, then we will know that this move up is likely over. Just because it's going down right now doesn't mean that we're reversing. This could be another ABC correction. It could be a correction to the last wave up, and it could potentially just keep on going up. So unless it goes down and breaks and holds below this structure, we have to be very careful about going short because this trend is up on all the higher time frames, and it may just continue up at the end of another three-way pullback. So be very, very cautious. We could just be bouncing because of the 78% fib on the higher time frames. This could just be a 78% fib bounce and then end up making another lower high, and just continuing the uptrend. Moving on to the US dollar yen. The yen pairs are moving pretty strong today, as you could probably see. The US dollar yen definitely has not broken any structure on the daily, so we can't say that the trend is down. We do have what looks like a possible five waves up now on the daily, so I mean, I wouldn't be surprised if it does go down and break structure. It definitely looks like it's due for it, but we cannot assume that it's going to go down and break structure. The second we start assuming things about the market is the second this thing will make a higher low and just keep on trending up. So we are likely in a wave B, or we are in the continuation of the uptrend. If it makes another higher low, especially at a fib level, it goes up, we definitely should be continuing to look for longs at the end of every pullback we see. So going down to the 1 hour time frame is where I got my Fibonacci retracement on this whole move up from here to here. If we do get a good Fibonacci bounce and we do get a good break of structure, then that means it's probably back into the uptrend. If we don't get a break of structure and it makes another lower high, then I would just continue to look for shorts if you're a short time frame trader. Now, if it does go down and break structure, then that definitely means that the higher time frame move is probably over. Then we definitely need to start looking for shorts in a much bigger way. But like I said, because the trend is up, I personally am still looking for longs in an uptrend. I'm looking for Fibonacci bounces and breaks of structure to the upside for possible long opportunities. Even though I see five ways on the higher time frame, that really does not mean anything to me whatsoever. So moving on to the other yen pairs. Some of these yen pairs are moving down pretty strong today for sure. Now, the euro yen itself, I mean, definitely still could be an ABC correction. I mean, it hasn't broken structure yet. So this definitely could still end up turning back up. It still kind of seems to me like it would. We are at the 50% Fibonacci retracement, so we need to keep a very close eye on this on shorter time frames for a possible break to the upside. Going down to the 1 hour time frame, like I said, this could be a wave C right here. So I would always label this first push down as an A or a 1. Corrective move up, either a B or a 2, which means that this could be a wave 3. And if it is a wave 3, it'll just keep on making lower highs, it'll go down, break structure, and just keep on going. But if it really is a wave C, which it definitely could be, right? A or 1, B or 2, 3 or C, then potentially we would get a push up, we would get a break of structure, and we would get a reversal back to the upside. So we would want to get long if that is the case, for sure. And moving on to the pound yen, one of the reasons why the pound yen is so strong down is because of the pound, not just because of the yen. We had a weak pound versus a somewhat strong yen, which made for a very strong move to the downside. Now, we do have a breaker structure to the downside, so I would definitely suggest looking for shorts on sort of time frames. But this also could be an ABC. So we're at the 78%. So if we do see a breaker structure to the upside on sort of time frames, we could try to go long to see if it really does go back up. But we'll have to keep a close eye on this because I am definitely still predicting that this is going to go down for a big wave C on the weekly. And there's definitely still a chance that this does just keep on going down. And luckily, now that we got the breaker structure, we should be looking for shorts in a downtrend anyways. Going down to the 1 hour time frame. Now, if it breaks structure to the 1 hour time frame, that doesn't necessarily mean that it's going up. But if it does break structure and you're a short time frame trader, you can try to get in on a pullback or after the break of structure. You can try to get long after a pullback. But be very careful because it could just make another ABC correction. A break of structure on these sort of time frames doesn't necessarily mean trend reversal. It could mean trend reversal, 1, 2, 3, but it could also mean ABC. So, if you do get a break, you definitely want to throw your Fibonacci retracement out here and observe the market to see if it makes an ABC or a 1, 2, 3. You could possibly try to go long right here and then learn and earn at the same time, whether it's a wave 3 or whether it is a wave C. So yeah, we got some pretty big news this week. We got CPI on Wednesday, we got PPI on Tuesday for the dollar pairs. And yeah, today is Monday, which is normally kind of a slow day, but boy, the yen pairs, Swiss pairs, and even the pound pairs seem like they're moving really well today. So keep an eye on your charts. Not every Monday is a slow day, so seems like this is a pretty active Monday in the market. And next Monday is when Donald Trump takes office, so that probably will be a very active day in the market also. So anyways, as always, I hope everybody enjoys the rest of the day and happy trading to everyone.